Mutual funds. Now, Indian investors are showing interest to invest in mutual funds, small and mid-cap in schemes. The mutual funds to establish a framework. The SEBI is establishing, SEBI has suggested the trustees of mutual funds to establish a framework to safeguard the interest of investors in small and mid-cap schemes. The high-end regulatory scrutiny on mutual fund products that bet on smaller companies comes in the wake of concerns that segments are overheated while investors flow into these schemes continued unabated. Many Indians, small investors, also trying to trade in shares by opening demat accounts. If not possible, the small investors are investing in small and mid-cap mutual funds so that they can enter into share market through mutual funds. Because of increase in volume of funds invested in reaching mutual funds in small and medium caps, SEBI has taken steps to protect the investors' investments. The capital market regulator has asked the fund houses to list the steps taken to protect the investors in such schemes of small and mid cap. Also, the SEBI has directed the trustees of mutual funds to show the steps taken by them to protect the investors, to protect the investments, to protect the interest of investors. See, now the SEBI is showing, SEBI is announcing the caution about the investments made into mutual funds. The reason is many small people also trying to enter the share market through mutual funds. So much of the funds, more of the funds are being invested by small investors through mutual funds of small and mid cap. During this period of last 2 years, there is the small company shares share prices are improved, the gains also improved. Expecting the high returns, the investors of especially middle class and lower middle class people are entering the market, in the share market, to earn more profits by entering into the share market through mutual funds. For this purpose, to protect the interest of investors, SEBI has cautioned the trustees of mutual funds to announce what steps they have taken to protect the interest of investors from highly fluctuations. Now we can see there are high fluctuations of price increase as well as price falling also, which may affect the investments, which may affect the value of investments by investors. So that should not be the character of mutual funds. Mutual funds should be careful in investing the investors' money into selecting and investing. The time of investment also important. The price of entering purchasing the share also important. All these steps has to be prescribed. All these steps has to be standardized, prescribed by trustees of the mutual funds and informed to the SEBI what steps they have taken to protect the interest of investors. Means there should not be huge profits. Also, there shouldn't be huge losses. Steep gains always leads to steep losses also. Steep increase in price also may lead to steep fall in prices. So this should be protected. For this purpose only, the SEBI has prescribed the standards of margins. There should not be more than this standard, 10% or 5% like that, depending upon the share price. Sometimes it will be prescribed at 10% volatility, so in some cases it is 20%, in some cases it is 5% only. Upper route is prescribed to protect the investors from steep fall or steep rise in prices. All this should be the investment in mutual funds. The SEBI has directed the trustees of mutual funds to invest in shares based on the performance, book value, but not based on overvaluations or future projections. That will protect especially the investments made based on the book value, price earning ratio, return on capital in the previous years will give stability to the and improvement of share price to protect the interest of investors. If any investment is made based on valuations or based on projections, future projections, may lead to steep fall in the prices of that share and invested and loss to investors. All this should be protected. All these investors who are innocent should be protected from the wrong decision taken by the mutual fund trustees. SEBI is cautioning in every way, that is, they should not be influenced by the propaganda or influence or broadcasting of unauthorized people, and also the advising the trustees of mutual funds to prescribe the steps taken, to inform the steps taken by them to protect the interest of investors. All these steps are to protect the investment of investors. This is more precious, and which should encourage the investor but should not discourage the investor in share market. Now the share market is digitally maintained, digitally monitored, and that every information available in the share market SEBI is also available to the individual investors. Those who are investing in huge funds, they may take individual decisions, but mutual funds route should be safe in a safe way, safe and riskless for the small investors to protect their investments.